Hey folks, how you guys doing? This is Jimmy, your local real estate professional, and today I'm giving you a quick market update. Alrighty, long and the short of it, things are different than they were last year. I know, genius, right? You're probably saying to yourself, "Man, that Jimmy Roberts is a Notre Dame," right? Okay, so let's jump right into the details about specifically what I'm talking about. Over the past few weeks, I've had the opportunity to appraise about 20, 30 properties, and I compare that to like last year about this time. Last year, this time, I probably appraised about, I don't know, 30, 35 properties. So that's the first signal. The volume, the appraisal volume that I've seen in our company, and I think our company's pretty standard, has significantly dropped, right? It's probably at about, I don't know, we probably dropped about a third from where we were last year. All right, so that's indicator number one. Indicator number two, out of all those properties that I appraised last week, or over the last couple of weeks, I should say, uh, we're now about 25 to 30% of those properties are in declining markets of some sort. Not all of them are like that, but they're not. I'm talking 30% of the properties are not like that anymore. They may be declining at about a, I don't know, a 3% per year rate, which is still kind of stable, but they're declining. So again, about what is that? So if you're looking at about 30% of the markets that I'm appraising in, and I'm appraising in Wayne, Oakland, Macomb, and parts of Washington County that have seen a decline in their home values, or a declining trend in their home values over the last year. That's pretty significant, right? Um, the others are increasing for the most part, but they're not increasing like that. You remember last year about this time, home values were just skyrocketing, and it was ridiculous, right? If you put your home on the market today at $100,000, by the end of the day, you had four offers for offering you 150. That was just ridiculous, right? Well, those days are, at least they're in our rear view mirror for right now. They may come back later, but for right now, they're not there. Now, why do I tell you this? I tell you this because there is a change. We've seen this, we've talked about it, but now you can. I've actually got numbers to verify it. Right? Uh, the economy is changing. Home values are stabilizing. I like to call it stabilizing. Right? Home values are stabilizing and to a more rational level. Now, with the recent increases in interest rates, again, I don't know about you guys, but interest rates have doubled in our area. So last year this time, if you can get a 30-year fixed mortgage anywhere in the 2.5 to 3.5% interest rates. Now you're looking at 5.5. That's one. Just recently, matter of fact, just earlier today, while watching the news, um, gas prices have freaking doubled. Right, last year this time, a gallon of unleaded gas was like 2.50. Now the average cost is $5. That's huge, and that's as of today. Right, these things are all going to affect our economy and our ability to purchase. So when you are in this, if you are in actively in this market, whether you're buying and selling, now is the time to be a little bit more conservative. Excuse me, scratch that. Now is the time to be more conservative. If you're selling, uh, don't try to push the market. I mean, don't get ridiculous with it. If your home is worth $100,000, list it at $100,000. Okay. If you're buying a house, if you're buying a house and $100,000 is your max, don't go over that. Don't go over that. You will not be supported by a favorable appraisal or valuation by any bank appraiser. Okay? So this is Jimmy Roberts, your local real estate professional, giving you the scoop on where we're headed, or where we are right now with our local real estate market. Alrighty, I will catch up with you later. If you guys have any questions, please drop them down below. I'd love to answer your questions, and I will catch up with you later. See you.